And then, hey, Netflix shows up.
Go to Netflix.com. Make a list of the movies you want to see. It's easy.
Hey everyone, welcome back to our finance channel. Today we're diving into Netflix. NFLX, the streaming giant with a stock price at $1,181 and a market cap over $500 billion in July 2025. Is this high-flying stock worth your money? We're breaking it all down with a 7-metric analysis using the latest Q1 and Q2 2025 earnings. Whether you're a shareholder or eyeing an entry, stick around. Netflix went from a DVD rental service in 1997 to a global streaming powerhouse with 302 million paid subscribers by late 2024. But it's facing fierce rivals like Disney Plus and Amazon Prime, massive $18 billion annual content costs, and tighter regulations. In 2025, Netflix is pivoting to ads, gaming, and live events. Can it keep its crown? Let's check the numbers. First up, valuation attractiveness. Netflix's stock is at $1,181 with a 50.3 PE ratio, way above Disney's 20.8 times and Amazon's 37.4 times. The price to sales ratio is 12 times, price to book over 20 times, and free cash flow multiple a hefty 60 times. This high valuation reflects hype around Netflix's growth, but any slip in earnings could spark a pullback. For growth investors, it's appealing. For value hunters, it's pricey. We score it 8 out of 10. Next, financial health. Netflix is crushing it. Q1 2025 revenue was $10.54 billion, up 12.5%. Q2 hit $11.08 billion, up 16%. Net income, a solid $6.06 billion, with a 34.1% operating margin. Free cash flow soared to $2.27 billion in Q2, with a full-year forecast of $8 to $8.5 billion. Debt is low, with a 0.63 debt-to-equity ratio and 19.8 times interest coverage. Return on equity is a stellar 42%. Netflix is a cash flow machine, a perfect 10 out of 10. For dividends and buybacks, Netflix skipped dividend, focusing on content and stock repurchasing. In 2024, it bought back $5.43 billion in shares. 2025's plan is a massive $17.1 billion, including $1.6 billion in Q2. This boosts EPS to $23.47 in 2025 from $19.83 in 2024. Great for growth investors, but income seekers might pass. We give it 8 out of 10. Company strategy is where Netflix shines. Its content, tech, and new ventures are top-notch. Netflix hits like Squid Game drive 302 million subscribers, with non-English content making up a third of 95 billion viewing hours in H1 2025. Its AI recommendation engine powers 80% of views, and generative AI is cutting content costs. Like in El Eternauta, the tier is booming, with 94 million monthly users and doubling revenue in 2025. Plus, 123 games and live events like NFL games are game changers. Strategy gets a 10 out of 10. Risk threats are real. Netflix's 302 million subscribers face competition from Disney Plus' 123 million and Amazon Prime's 200 million, which leads US market shares at 22% versus Netflix's 21%. Content costs hit $18 billion in 2025, and flops could hurt retention. Global regulations like the EU's 30% local content rule raise costs. High valuation also make it sensitive to rate hikes or recessions. Netflix's strength mitigates these, but we score it 6 out of 10. Growth potential is why investors love Netflix. H1 2025 revenue hit $21.62 billion, with a full-year forecast of $44.8 to $45.2 billion, up 15 to 16%. The ads here is on fire, with 94 million monthly users and revenue doubling in 2025. Netflix only reaches 40% of connected TV households, leaving huge growth in markets like Asia, ARPU $7.3 versus $17.3 in the US. Gaming and live events like NFL games at new streams. This earns a 10 out of 10. Asset quality is Netflix's backbone. Its content library with hits like Stranger Things logged 95 billion viewing hours H1 2025. The AI-driven platform powering 18% of views and global streaming network are unmatched. Netflix's brand can launch content in 190 countries overnight. This is a perfect 10 out of 10. Let's wrap it up. Netflix scores big. 10 out of 10 for financial health, strategy, growth and assets. 8 out of 10 for valuation and buybacks, and 6 out of 10 for risk. Overall, a stellar 9 out of 10. Netflix is a dream for long-term growth investors, but its high valuation means short-term risk. Hold it if you own it, but if you're new, wait for a dip. Maybe at 40 times PE ratio. Watch subscriber growth and ad revenue closely. What's your take on Netflix? Drop it in the comments, like, subscribe, and hit the bell for more deep dives. See you next time!